drink, but don't do it at the same time. Thank you very much, and enjoy.
Good evening, everybody. Hopefully Barcelona is treating you guys amazing. We have our lovely panelists joining us on the stage right now. Awesome. Great to have everybody here. So today, we're going to be discussing crypto trading strategies for volatile markets. I am the host, and I have the lovely panelists that are going to be joining me. Volatility is not new to crypto, as you guys know, and it is a double-edged sword. It could be blissful, or it could be a nightmare for traders. And I have these experts with us that are going to dive into crypto trading strategies in these volatile markets. So let's introduce them. Without further ado, we'll start from left all the way to the right, and then we'll get started.
Hello, everyone. Nice to meet you. This is my second time at DEXT Force Festival. Very excited to be here. So a little bit about my background. I founded my first stock automation company when I was 16. Exited the company at 21. Later on, I worked for Morgan Stanley and managed $50 million fund, systematic trading, long and short, as well as a directional trading fund. And then I founded my own crypto trading platform, completely regulated trading platform for crypto quantitative strategies. We use the AI since 2017, and it's been going on very successfully.
Thank you.
Hello, everyone. Pleasure to be here. I'm Paul, and for 7 years, I'm involved in the crypto market, and for about 6 years, I'm leading the development of DeFi projects and overall Web3 projects as well. Currently, I'm working on the application that is basically executing the automated strategies. So it's highly tied to crypto trading strategies we will discuss in today. Thank you.
Lovely.
Hello, hello. My name is Antoine. I'm the CEO at the UNCX Network. So we're a B2B DeFi services provider working with DEXTools since pretty much day one. So this is like 4 years ago that we started our journey. So it's more or less like 4 decades in crypto, if you think about it. And thanks to the nature of our services, we're obviously very close to the markets and to the trading activities, even though it's not the main activity for us. And we currently are responsible for $400 million of TVL. And yeah, very happy to be here. And I'm just gonna take the opportunity to thank DEXTools so much for having us represented today here. Thank you.
Thank you.
Nice. Hello, everyone. Thanks to be here. Thanks for DEXT to put it together. My name is Pedro. I'm originally from Venezuela, econ background, finance and corporate. Recently, I just got out. I was CFO of Bricken tokenization platform. We did launch, I don't know, 300X or something. So yeah, try to share some of the knowledge of running a crypto treasury within this volatile sector that we run into.
Awesome. Let's dive right into this. So before we could jump into crypto trading strategies, and I know that's why all of you guys are here, let's first understand volatility. And volatility, as I mentioned in crypto, you see assets with sharp price decreases or increases, and that could make you or it could break you. So understanding volatility, I have a question, and I'm curious, people ask all the time, why are prices going up? Why are prices going down? And people don't really understand the cause of it. What is the primary reason that you think crypto prices go up or down? Anybody can take a jab at this.
Well, if I may, maybe for the markets that we are very present on, which is more like the low cap market. I'd say one of the reasons for the volatility that we observe today and for the last 7 years is mostly related to the size of the liquidity versus the size of the market cap. And as people trade, sometimes it's even an indicator, especially on trading for centralized exchanges where you don't clearly see what's the liquidity and what's the depth of the liquidity. The simple answer for volatility is that if the liquidity is thin, the volatility is likely to be more extreme. Of course, we could go down the rabbit hole for pretty much the whole panel,
Of
but
course.
that's
And that's, let's say, more so on the technical side. But what
Sure.
about things like macro events, interest rates, inflation, political, like geopolitical events, anything like that that might swing crypto to the extremes? Does anybody want to touch on that for a minute?
Well, that's very now on the papers, let's call it. There's always a relationship between financial markets and crypto markets. Crypto, because of decentralized nature, obviously tend to be more volatile. So I think that's the main reason, having access directly and getting out directly. The second one will be regulatory system. So laws are getting used to what we do. So while that process regulates and normalizes, then obviously volatility is going to be present. So you had to watch out for that. And then asymmetry of information. That's the same thing that it complements the liquidity, what he was saying. So access to information, the better you do your due diligence, the better you know what's going on, and the volatility. With the volatility comes with knowledge. So the more they know, the...
Thank you. And now that we understand volatility a little bit better, let's dive into portfolio building strategies. And I know this is crypto trading strategies, but it's very important that you have a portfolio, a base portfolio strategy. And I want to check up on any of our extremely bright panelists on how would you start with building a portfolio. Is diversification important? What would a rock-hard portfolio look like in a market with this much volatility?
I think it's very important to understand crypto markets to begin with, because crypto markets are basically driven by sentiments, and there are a lot of narratives which keeps changing. In 2017 to 2020, there was a DeFi narrative. Afterwards, for 1 year, we had NFT and metaverse narrative. And today, those tokens are nowhere. No one is even interested in them. So I think if you want to build a good portfolio, you have to go with the narrative. Many of those companies don't even exist. They don't have revenues. They don't have a proper team. Just they're coming out from nowhere, and just from the sleep someday, they think they can start a token and they raise a token. So, but still, if you want to make money, that is the objective of building a portfolio, right? So you have to go with the narrative. So the current narrative is like deepen, RWA, AI, all the money is going into these projects. So we have to always see what is the current narrative, and among those narratives, which is the kind where we can have huge potential, but at the same time, lower downside risk. And there are like several ways to assess that, like how to build that one. We have to see who is backing them. What is the background of the people who are doing it, whether they had any previous experience doing the same thing, whether they come from a very good education background. After doing all this kind of due diligence, we can get more or less the idea that, yeah, maybe they will be able to pull it off. So in my opinion, this is how we do it, that we select a portfolio based on the current market narratives. And when the narrative is dying down, we try to shift into something else, like which is having a better narrative. But there are some things like which can always be good. Like, for example, some of the layer ones, more number of adoptability, more number of users, more number of apps being built on it. They will always have some intrinsic value because of that. So they can be kind of like a long-term portfolio, but when it comes to short-term portfolios, we should always go with narrative.
I agree with you, and we're going to dive deeper into, I guess, narrative trading and how to spot these narratives and trends and take advantage of that. I will add as well, I think it's important to be rebalancing as often as possible when you do have profits. So like having that base portfolio, whether it's like stacking sats in Bitcoin or ETH or your favorite L1, and just to keep rebalancing and locking in those profits, that's worked best for me. So I do understand the narrative trading, but what if it was somebody looking for a long-term portfolio that doesn't have the time to look for these narratives, that doesn't have the time to be in the trenches and these Telegram, Discord chats. How would they like weather this extremely volatile market? What advice would you give to somebody, I guess, who just wants to buy and hold?
Yes, and honestly, if we're speaking about the highly volatile markets, definitely narrative trading is something that we should use because it indicates the liquidity inflows. But when it comes to long-term investments and basically to different types of users that we have on the market, we should take into the account the risk profile of each user. We all have different psychological level of investments. And this is basically where we should draw the line. If you follow a narrative, it's good, but we may end up just gambling because we switch in one narrative to another, trying to basically hop on the top, extract profit, but we all know that there are a lot of more experienced guys on the market that actually will drop their assets on you. That's why it's definitely better to stick to long-term portfolio for not saying average user, but for most of the people, it's definitely better to build long-term portfolio, which includes more stable assets rather than switching to narratives that just appearing on the market. It can be a tiny amount, let's say above 10%, and that's it. Yeah.
Amazing. So now you guys understand a little bit of building a portfolio, the importance of building a portfolio that could, like I mentioned, weather the storm of this volatile market that we're in, that we're lucky to be in. And let's dive into the core of the discussion, which is crypto trading strategies. And no fluff, let's just jump into it. Like, what are the best strategies that work for you guys? Is it day trading, building your own strategies, bots? What works for you guys? What are you guys doing right now that is making you money?
Honestly, I will jump
for
in.
it. Yeah.
You're excited.
When it comes to trading strategies, I don't want to recommend something, but this is a good advice. If someone advises you to do something in crypto, that's most likely a scam. And if someone tells you it's 100% will work, it's also a scam. So day trading is something that definitely should be used by the very experienced traders, and this is not something I would advise for the user that come into market from time to time, just rebalancing his portfolio. For long-term opportunities, using the appropriate narratives, manually executing your strategy is good, as well as we have currently on the market different decentralized applications. One of these applications I'm currently involved in. We're building automated trading strategies for the users who actually don't know nothing about crypto and about the execution of these strategies. So let's say if you can spend 24 hours in the market, you definitely can better manage your portfolio and not giving your money to any third party. That's definitely a case. But if you would like to have your, let's say, yield above average, you may use different solutions. The most obvious one is Yearn Finance, but we're not limited to it because there are cross-chain solutions that currently are appearing that allows you to increase your APY, increase your capital efficiency. So that's highly tied to the amount of time that you're spending on the market, as well as on the your psychological level as an investor.
Awesome. Does anybody else want to jump in with their profitable trading strategy?
I can add something there, for sure. So we follow a principle which was given by Marcos Lopez de Prado. He is a Spanish quantitative finance professor, very well known around the world. He stays in Dubai now. So I had an opportunity to meet him a couple of years ago, and that's how my company was born. The major problems that we are facing in trading, for example, is that the same type of trend doesn't exist every day. Every day, sometimes markets are mean reverting, sometimes it's trend following, sometimes it's range bound, sometimes it's swing. So it's very difficult to come out with an algorithm that works all the time. There is no such thing as like one algorithm, you just make it and you leave it and it works all the time generating revenues to you. It's just simply a Madoff scheme if someone tells you that. And that cannot be true. And the Marcos Lopez de Prado wrote a book on that one, Finance in Machine Learning. So this is the kind of approach that we followed. what we have to do is like we need to have different variations of strategies. Something for mean reversion, something for trend following, something for swing markets, something for scalps, so many different types of strategies. And we feed all these things to AI, and AI will predict based on the past 30 days, 45 days current market trends, like which is a strategy having the highest probability of winning for the current market trend. So, and in this one also, Marcos Lopez de Prado called something as quantum mental approach. Quantum mental approach is when like your quant models are telling you something, but you are a human, you can have your thought and you can decide on that, whether that's a good thing or not. Because even though sentiment analysis has gone way ahead than where it used to be like 6 years, 7 years ago, when we built the engine ourselves completely in-house, we felt this challenge that some of the times like if there is FOMC meet or something else is happening. For example, there was the war which is going on currently between Iran and Israel. On that day, the Bitcoin suddenly dropped. And this was a kind of like live news, and we didn't know it. So nobody knows it. So the quant models don't know it. So sentiment models know it only after it comes, not before it comes. So at that point in time, like you need to adjust your algorithms instantly in real time so that like it gets adjusted to the current market condition. So this approach is what Marcos calls it as a quantum mental approach. So if we have all these things in place, then I think like trading will be much more easier, and we have at least 70 to 75% chances of winning the trades. So the secret is in having different things and selecting among that.
Awesome. I mean, I love everything you said. I think you're my new quant. Anything from this side?
Yeah. Do you want to go?
Go.
So first, maybe I could say that as an individual and as a company, we obviously have different strategies. So this is one of the first things that we recommend, that I would recommend, is to pick a side. Your risk profile is very important. And back to the question that you had before, or the thematic about like diversification. I think what's important, of course, you have to follow different narratives, adapt your strategy real time, or shorter time frames, let's say. But to me, it's key to understand and pick one side of the market. You have real-world assets, you have DeFi protocols, you have NFTs, you have fungible and non-fungible tokens at the same time, ERC-404s. You have like different narratives, and before thinking of diversifying into 2 different or 3 different narratives, you should study one of them, pick your horse in a way. And even though the horse is not hot for a couple of years, there is this seasonality in crypto that happens a lot. Personally, it's also what we sell as services, right? We're into DeFi, so we're obviously, and I'm obviously personally very DeFi oriented in terms of positions, investments, and so on. And so when it comes to the strategy to execute in the DeFi markets, let's say, I would recommend to focus on companies that have been around for a certain time, not what they want you to buy, not the fresh stuff, but the stuff that is proven to be resilient. Leaving a bear market, still being around as a DeFi protocol is not given to all the companies out there. And then here's the shield: use DeFi Llama. Use DeFi Llama and use the protocols that generate revenue. I believe there is a recent example that can illustrate my point, is Uniswap. So Uniswap token, everyone knows it, the airdrop tokens in 2020 or 2021, around that time. The point is, when Uniswap, for example, activated or had debates about activating the fee protocol sharing, the market moved instantly, for example. My point being, with a company that makes revenue, you have more naturally a certain upside. And you can check this data for those who at least generate turnover on chain. So I recommend, like, the data is here, it's not widely used yet. Yet it's starting to be used. I think if people here follow DeFi, you can see Aave is doing extremely well. But I'm not going to go into specific tokens, obviously. But yeah, study one side of the market and apply some of the criteria to evaluate, especially for a long-term portfolio. Seasoned companies, seasoned protocols is my answer.
Thank you. And I'm not sure if you wanted to add something.
Yeah, well, elaborating on that is, I think the opportunity that crypto and DeFi gives you is to have access to data. So I think I have 2 rules specifically. One of them is, you asked about day trading or whatever. I always put together the shorter the time you want to trade, the more sophisticated you have to be. So don't use manual to do day trading. If you want to do day trading, then you have to use quant, because this is an open market driven by data. So you're disadvantaged if you're not using it. The longer period you're gonna hold it, then maybe you can do your, functional analysis and all that. That's the first premise regarding technology. And then the second will be the more data available and the more data verifiable, the better. Do not, I try to advise, do not gamble. But that's the main reason why blockchain and DeFi exist, because we have the data. So why keep doing it like you used to do it through your bank instead of, getting information about it? So.
Thank you. And diving more into crypto strategies, you guys have mentioned this a few times now, and that's that crypto really thrives off powerful narratives, whether it's like AI, meme coins, RWA. And one of my mentors really shoved this down my head, and he didn't create this saying, obviously. Do you want to be right, or do you want to make money? And it's like, I know that these cat coins and meme coins, it's not the future, but that's where the volatility is, and that's where a ton of to be clear, money could be made, and you're going to be either at the top of those, at the front of those trends, or you're going to be FOMOing a bit late. And you don't want to be the last person to these parties with these trends and pretty much hold the bag. So I want to ask you guys, how do you figure out what trends are hot in crypto? Like, how are you at the front of these trends? And then how do you take advantage of the volatility?
Well, you check DEXTools.
That's a good
That's a good answer.
Native integration. Yeah. Coming back to narratives. And we should probably divide the potential good for the world and basically how we should provide something very unique and useful to the market from the incentivization of users. So basically this is how meme coins and all other narratives are working. Because it's just the indicator of where the users are aiming at, where the liquidity inflow in the current amount of time. And this is why a huge exposure in new narratives is bad. And maybe I would like also to question the approach that actually was proposed by Antonio, because if you put your money in just one side of the market, you increasing your exposure a lot, which may lead you to the impermanent loss. Not good. So in my opinion, definitely we should put our time, our vision into the narratives and extract value from it, but not rely fully. So it's great when you have a tiny amount of your portfolio, when you're playing with new narratives, but actually you have a good base of the structured assets that for a long amount of time in the market.
Of course, and that's why I mentioned at the start, rebalancing. After you make a great trade in a meme coin and you could lock in profits, stack sats, buy Bitcoin or buy something that historically has risen over the last few years and hopefully will continue to do so. So you're compounding those gains and you're not just giving it away back to markets. I'm going to add a quick nugget for you guys on how I kind of get ahead of narratives aside from using DEXTools and other platforms like that. But what I really found is get yourself some communities. You pay to play, to be honest. I have got into this NFT community, which is a premium, but these guys are at the forefront of on-chain trading. These guys are trading every single day. So get yourself in a community that are sharing wins, are at the front of the market, are pretty much looking for new narratives, new coins, and bring value to them as well, and they'll bring value back to you. So that's kind of how I stay ahead of the crypto narratives. I can't do it myself. There's a new narrative, new coin. It just moves so quick. You need a team or a community, so find a tribe. And let's move on to risk management, because anybody in this room can, buy a coin and see thousands of percentages, of gains, but making money is one thing. You have to learn how to keep it. So how do you guys mitigate loss or just remove risk from this uncertain market if it moves against you? What are you guys doing to protect your gains or your portfolio?
Would you like to start, or I can dive in? Good. So risk management is one of the topics that is not really presented on the market, in my opinion, and on different speeches. So for the, let's say, average portfolio, which has a mid-exposure, mid-risk, and if you just a spot user that from time to time buying crypto from the market, also investigating different narratives, you can use simple options for hedging your portfolio. This is something that can be studied quite easy, and this is basically the very first advice. So you just pay in premium. If you see the quite tight situation on the market, probably something will happen, and you're not feeling really safe.
So when you say hedging, like we see that in TradFi, traditional markets, are you talking about like options, futures? How would you do it specifically?
Yeah. So basically, there are several types of options, put and call, and depending on the market conditions, if you feel that your spot portfolio may fail, you just buy in the option, pay in a little premium, or not really a little, depends on your position, but it's also a separate topic. But there is something also worth to mention, that in case you use options to hedge your portfolio and you have a lot of assets that are not really presented on the market, so let's say you super high risk trader, it may be hard to find someone who will sell you options. So that works for quite huge assets that well presented on the market and which can be at least partially predictable. So if you buy a new meme coin that actually presented on DEXTools for about an hour, sorry, it may not happen.
Thank you. Is there anybody else who wants to add on mitigating losses or?
Yeah, sure. I mean, starting from getting your risk straight, what I usually do in my practice is I always take my gains. I don't invest my gains after I repeat the process after I get the gains. I don't leave it in the position. That's practical advice. Talking about hedging, you have correlations between assets. So when the spreads get high, you can buy a long position and then just hedge with another one that has correlation on the opposite side. That will help you out to kind of balance risk on managing that. And the other one is the whole DeFi system and ecosystem has evolved so much. So now you have different nature of assets. I would really encourage you to look into those because, I mean, if you do long positions to specific tokens, you can do liquidity provision that you can get all the data, and that will give you, so I usually position gains on either liquidity provision on specific, it's called price ranges, or you can do real world asset. You now can buy a T-bill on crypto, which is something that, a couple years ago you weren't able to. So if you want to bring on more capital, maybe you want to start touching some regulated asset like ETFs or something. The other one is easier for you to structure, let's call it a corporate structure that will allow you to do it. So yeah, I really encourage you to see the full picture, to analyze everything, to really be able to diversify and don't just stick with that token that give you the gains. Just move on because there's always new things coming up.
And if I may add here, because we're talking about risk mitigation, but let's also address the loss mitigation or reduction of losses. I think it's important, unless everyone is the best trader ever here, which I hope, right? But you also have to realize that you need to let the market humble you sometimes. We are not, whether it's like short, long, midterm, you have to also acknowledge that every trade can also go, they can go both ways. And I think, integrating this, that, you have to at some point, cut the losses. Whether it depends on, whether it's spot, futures, options, you have to sometimes, pull the trigger on yourself. And maybe if I have like 20 seconds, I have a funny thing that we noticed on chain because, as we're on-chain provider, providing vesting services. So originally, this is not for this purpose, but what we see sometimes is people that refuse to let their emotions take over. And so what they do is they're actually locking their own positions. Like say, for example, you buy ABC on chain, and to avoid any form of emotion, whether it goes upside or downside, people actually lock against themselves the supply. No one is asking them to do so. They're just doing so that there is no emotions when it comes to their trading strategy, which I kind of find funny. Yeah.
Thank you. I mean, these guys are degens. Nobody mentioned a stop loss, but I definitely would recommend using a stop loss. We've been all there, right? Also, with risk management, hold your own keys, guys. Don't get comfortable like filling up an exchange or a leveraged, position. People get comfortable, and then they end up getting wiped. And most of the times they don't realize what happened till it's too late. That's pretty much it. We shared a bunch of great insights from these experts here. We're wrapping up. If you guys have any questions, feel free to catch any of the awesome panelists and ask away. And enjoy the rest of Barcelona. Thank you guys for coming, and we'll see you guys soon.
Thank you.